Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, March the 27th, the year 2018. Let's talk trading. Money, money, money. I guess you guys, maybe some of you are old enough to remember that song. Maybe you know there's a few songs out there about money. And when it gets to trading, that's what it's about. It's about money. Yesterday, I talked about FOMO, the fear of missing out, and hindsight. I think I've already done a woulda, coulda, shoulda video. And in fact, if you know about my one of my other YouTube channels, my alter ego, um, where I play my solo blues act, I even wrote a song, Woulda, Coulda, Shoulda Blues. So money, money, money. That's what we focus on in trading. It's about making money. But you see, if you focus on the money, chances are you're not going to do very well. And what's going to happen is you're going to lose. And then when you lose, you're going to get fearful, you're going to feel bad, and you're probably going to give up on what method or tactics or strategy you're employing and look for another one or indicator. Oh, this indicator doesn't work. It's no, and then you just keep going from system to system like a butterfly. And instead of doing anything useful, you just wind up losing money. You wind up losing money paying for indicators and systems and books and trainings and seminars and all the blah 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 out there. I mean, some people say, "Hey, give me $500 and you can be a lifetime member. Give me, $2,500 and I'll show you the secret." And just about every trader has done one of those things. And that's why I said a long time ago, if you're going to study anything, study psychology, learn how your brain works, learn how the brain works, so you can overcome the deficiencies. Because, we all have that human brain, and that human brain has some things built in that don't really work well in trading. And one of the things that's built in or isn't built in is money and risk management. You guys know I have to find a segue to this screen every day, right? So that's something that you definitely have to overcome. So you focus on the money management. You don't focus on the profit. See, you focus on your system, your method, your tactics. You focus on, not risking too much. You focus on making sure you have the right position size. You do all that, and if your system pays out, you will get paid. Okay, let's take a look here. As you can see, on the weekly, dollar Canadian popped through that weekly low, but now has come back up. We're about 32 pips off the open. The gap filled, and we still have 1, 2, 3, 4, 5 gaps that need to fill. This one here just missed by 1 pip. This one by 2. And you can see we're not too much price action at the moment. And here we have on the daily, you can see it broke above or into the wick zone here. And actually came out, broke below, and went back in. We've got only 9 pips above the daily open at the time. And you can see we've got some very nice ranges in the pound pairs. And you can see here dollar Canadian towards the end of the Asian, beginning of the London. We had nice signal to the downside, nice signal here to the upside, and we're getting right back into that buy zone area. Might be an opportunity for a buy zone trade coming up next hour. And you can see the rat zone, how well that worked today. Down here, there was no zone to trade. We've got, what, 87 range right now. So price pushed up. Nice gap here between the red and the green rat zones. And you can see red rats are enjoying their cheese right now. For the pivot, you can see open the pivot. Actually went all the way down to S1 and reversed up to R1 and came back to the pivot. Price action. Once again, you can trade at the line, you can trade the reversal, you can trade the turn trade. And I guess all those people who like to believe in Harry hindsight would say, oh yeah, well, you know, blah, blah, blah. Well, you can see right here, this hour, red at the line, pips to be made. So once again, rather than focus on the money, you focus on the method, and you can see here every day it will produce pips. Sometimes a little, sometimes a lot. And you know, 10 or more pips, maybe some people don't consider that a lot of pips, but you know, if you're trading $100 a pip or $10 a pip, you know, that's folding money. And here we go, price at the line again using the H1 candle color. You can see here using yesterday's 5 lines, high, open, mid, close, and low. You just trade the method. And I was talking about that book, Thinking in Bets. And once again, you see, if you just follow the method, if you just realize that sometimes you just won't be that lucky. Sometimes, you know, you'll just have, you know, bad luck. I mean, you could say right here, price broke through the line and you only got 4 or 5 pips. You know, big deal, right? Unless maybe you held on to the trade a little bit longer. But here you had a nice break. You know, you're looking at about, what, 25, 30 pips at the moment. Not too shabby. And those are the types of trades that we all want. But we don't know in advance how it's going to turn out. And so that's why if you're focusing on the money, you're up 1 pip and the price stalls. And you know, you want it to go up, and the next thing you know, it just rockets the other way, 5 pips. You're down. Now you're hoping it comes back. Now you're down 6, 7, 8 pips. You know, and then if you forgot to put your stop on, oh, who knows how far it goes. And that's why you have to say, hey, I'm going to risk $1 this trade. I'm trading a dime a pip. It went against me 10 pips. I'm out. And there's no reason to be mad. And when you see that you were out, you check and see, did I enter late? Did I enter early? Did I just jump the gun? Did I airball the trade? You know, what made me enter? You know, did I do everything right? Because if I did everything right and I lost, well, that's the way it turned out. Because if you keep doing everything, quote unquote, right, according to your method or system, and if your method and system is any good, over, you know, 100 trades, most likely you'll wind up with more money than you started, which is the whole goal. Money, 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 right? But if you second guess some trade and you don't take the trade because you thought something, and then all of a sudden that trade would have been the big win for the day and put you, you know, positive for the week or the month, you're going to kick yourself. And for those who watched yesterday, remember I had the somewhere around this area here, I was long, and I decided to take some pips off the table, didn't leave anything right, and I missed out on about a 200 pip run. And see, that's why I like trading the EJ. But I decided that I didn't like the downside potential, which was a tactical error. What I should have said was, okay, if it maybe breaks through down here, I should have had such a position size that maybe I only would have lost, 20 or 30 bucks, right? Say, if it came way down here and I was in somewhere, I think somewhere around here. I think it was, yeah, somewhere early in that trade. Somewhere around here. So what, 80 pips? I mean, if you're trading a dime a pip, that's $8. If you're trading $1 a pip, that's 80 bucks. I mean, really, if I would have said, okay, there we have it, maybe I could have gone the other way and say, where is the reward? If you want to do the old risk reward, and you say, okay, from that somewhere around here, the 70 area, if I would have said, okay, well, here I got a chance of 130 some pips. Some people say, maybe if it came here, they want that 2-to-1. So, yeah, there was definitely a nice risk reward that I failed to implement that into my analysis, and I am now in the woulda, coulda, shoulda bracket. That's that's it. That wasn't wasn't bad luck. I can't complain about luck. That was a failure to look to the upside and only focused on the downside. And here we have the wick zone, out of the wick zone, out of the wick zone. And you can see here, we just crossed that double O. This hour's almost over. Got about 10 minutes left in it. Holo zone, you can see here, price popped right through the holo zone. Good for about 8 pips at the moment. And you can see here, we had the bid crossing above the valley of the ask. And that's looking about 5 pips or so at the moment. And for those of you who have the 2018 donationals, I am employing this indicator regularly now because it's really helping with the timing. It's just really making it almost pinpoint accurate. And you see, fellow traders, you know it's not what you trade, it's how you trade it. So when you're sitting in front of your trading screens, you just, don't be focusing on the money. Be focusing on your method. It's not necessarily if you're trading the euro yen or if you're trading the dollar yen or dollar Canadian, because, or if you're trading stocks or bonds, because it's not what you trade. It gets down to how you trade it. And the TheRumpledOne is going to sign off. But as you know, I'm running for county commissioner, so I've got to go out to the county seat because the current commissioners are making a big decision. So I'm sure a few people are going to want to know how I would have voted. So I'm only going to have a short amount of time to, maybe get a few drips today, a few pips today. So anyway, it's not what you trade, it's how you trade it. TheRumpledOne signing off.